Two big name companies are having stock splits in the near future. One of them is Realty Income. They're going to buy VREIT, and then they're going to spin off their extra office space into its own independent real estate investment trust. And then the second is AT&T when they sell their media segment, their HBO and their Time Warner and Warner Media to Discovery. And then that's going to create its own new media company. So if you're a shareholder in either Realty Income or AT&T, this video is for you because we're going to talk about what a spinoff is, how it affects you, what you're supposed to do with these shares when they magically appear in your account. A spinoff is when a company will separate itself from an existing part of its already operational business. So that part of the company, that department or segment, that can be its own company and operate on its own. And the reason they do this is so they can kind of both pursue their core business. They can both focus on what their main mission is as a business. Example is in 2002, eBay bought PayPal. Now, eBay is a marketplace and PayPal is a payment processor. Now, they could help each other at the time, but just in the fact that they could partner each other so PayPal could process payments for eBay, but they're not really the same business. They're two completely different businesses. And then in 2015, eBay spun off PayPal so they could both focus on their core mission and pursue their own core objectives. You know, eBay can be a marketplace and pursue those opportunities, and PayPal can pursue payment processor opportunities. And when they did that, if you're a shareholder in eBay, you received one share of PayPal for every share of eBay that you owned. And since then, PayPal is up 556% and eBay is up 127%. Now, this isn't to say that eBay is a bad company. It's just to say that they're different companies and they have different growth opportunities. And the market and the share price is going to reflect these different opportunities in the marketplace for two different companies. When a stock announces that they're going to do a spinoff, the share price is going to take a bit of a dip on that news just because they know in the future their company is going to be a smaller company. And then when there is the spinoff, the day that the spinoff comes into existence and is a new company, the share price of the parent company is going to open up lower to reflect that price of the baby company leaving the parent company. So if you have, one company and then the spinoff, the main company price will be at like $100. But then the day of the spinoff, when the baby company comes into existence, mama company is going to be worth $75 and baby company is going to be worth like $25 to reflect, balance. Shareholders won't really lose anything in the deal. They're still going to be made whole, but they'll just be the parent company and the baby company. And shareholders are not going to have to pay any taxes on this new formed company. It's not like a dividend or anything like that because nothing is really, you haven't bought anything and you haven't sold anything. Things are just different in your brokerage account. But you will have to pay taxes on the cost basis of the new formed company if you decide to sell it. And this can be a little complicated for people. So if we imagine that you buy a company for $50, share price is $50, and then it goes up to $100, and that's when they do the spinoff. And the parent company will be $75, and the baby company will be $25. So the baby company will be 25% of the cost basis, and that cost basis of the original company was $50. So cost basis on the baby company is 25% times $50, which would be $12.50. That's the cost basis on your new spin-off company. But before you go selling off any shares in anything, you need to do the math, because I could be wrong. I'm not a tax expert. That's just how I understand it, and I could be wrong. Spin-offs usually do pretty good for investors, at least according to Investopedia, for the first 2 years. Historically, spin-offs have been good for investors. On average, both the parent company and the subsidiary outperform the market during the 24-month period following a spin-off. Investors who have been able to withstand the unpredictability of the initial days and weeks have seen nice gains. And lucky for us, there's actually a spin-off index, and it's got a funny, silly ticker. The S&P SPUS Soup SPUS Soup Index. Silly name. And going back a year, the Soup Index has outperformed the S&P 500 67% to 36%, but then the S&P 500 has outperformed after that, farther than that. So 3 years, the spinoff index is 32% versus the S&P 62%, and then 5 years it's 65 versus 120%. And spinoffs, they tend to be a little bit more risky and growth oriented, where the parent company will be more value oriented. When you get the spinoff, there's a couple different things you could do. You could hold it, reinvest those dividends if they pay a dividend, and you might do really well, at least according to that 2-year little study thing. And looking at PayPal, that would have done really well. Or you could sell the shares and do something fun with the money, or you could go ahead and put that money back into the parent company if that was like your initial plan for investing. With Realty Income, they're buying VREIT, and VREIT is a very similar business. Same business model with freestanding buildings and single tenants and triple net lease, and a lot of the tenants for VREIT are the same with Realty Income. So there's a lot of synergy there. So VREIT is going to have a little bit of office space, and then Realty Income has a little bit of office space. Then you put this little office space together in its own REIT and kick the bird out of the nest and see if it flies. And so that makes sense. Altogether, that makes sense, and it could be something that you want to invest in, especially with the world opening up and people coming to work back in the office. Office space could be in high demand with the vaccine, and everybody coming back to the office to work. AT&T, on the other hand, that's a bit of a different story. AT&T has, its 5G and its fiber optic stuff and its internet service provider and cell phone stuff, that side of the business. Then it has Warner Media, which is a media company, so they own HBO and movies and channels and that stuff. So they're two very different businesses. Now they're going to sell off Warner Media to Discovery, and then this new company will be able to compete, or they plan to compete with like Netflix and Disney, because they believe that scale is very important in the media, direct-to-consumer media space, like Netflix and Disney, and your little login to watch your streaming services. But they're also going to get $43 billion of extra debt that comes along with this, because AT&T is trying to get rid of its debt, and $43 billion of that is coming along to this new company. And People invest in AT&T for the dividend. And Discovery does not pay a dividend now. And with this new company, it'll be more growth oriented and have a bunch of debt. So it's safe to say that this new company will not pay a dividend. AT&T, they're going to have to cut their dividend. And some people think they're going to have to cut their dividend by 50%. They're going to lose a lot of debt, and that'll be good for them, and they'll be better able to focus on rolling out 5G and fiber optic networks and all that stuff. But the dividend will be cut. Some people think high as 50%, but we don't really know for sure yet. I'm a shareholder of Realty Income, and I personally will probably be holding these shares to reinvest the dividends into this new office space REIT. I'm not a shareholder in AT&T, but if I was, I'll just say a lot of people are selling their shares of AT&T. So, I don't know. I think maybe I would do that too, but none of that is financial advice at all. You have to do your own research on that. I think that's all I got for this. Hope you learned something about spinoffs. If you learned something, give me a thumbs up. I'd really appreciate that. Subscribe to the channel if you haven't. Then I want you to go have a good day, all right? Justin out.